Hi, this is JC.
Hey, JC, it's Joel and Dennis from Benzinga's Pre-Market Prep. JC Parets, founder of Eagle Bay Capital, 10-year market veteran, a technician. JC, how you doing on this Thursday morning?
I'm doing excellent, guys. How are you?
We're doing good. Let's just go broad market here. Buy the dippers. Came in, had to sell off on Tuesday, kind of a Memorial Day hangover. Right down and right back up near all-time highs here. Any unusual trading activity you're noticing just in the broad market?
No, not really. I like this market. I think we break out. I think we make new all-time highs. I'm definitely in that camp. I thought yesterday's action, was impressive. After Tuesday's sell-off, we came right back. That was great. It's exactly what we wanted to see as bulls. And it's not. You want to know the truth. It's really not, any specific levels or, just because, we're such great analysts when it comes to, analyzing the S&P 500. I think it's bigger than that. I think it's, the sector rotation that's going on underneath the surface that's really been holding this market up. And I think the weight of the evidence suggests that we keep going. You had the healthcares of the world and stable and tech, leading in the first quarter, and then come April, you kind of had some sector rotation into the energies and the materials and the industrials of the world, while the former leaders were digesting and kind of consolidating sideways in a healthy way. And that rotation is what has kept the market afloat. And I think money's coming out of the energy and the materials and industrials and, going into, tech and financials. And guess what? Tech and financials are the two biggest sectors in the S&P 500. So I think it's a good thing.
Yeah, I completely agree with you. The rotation, and that's what I always look for, when you're looking at a sell-off or the S&P futures trade down. Is there a sector still receiving money? And there seems to always be. It's very rare to see every sector is getting down everything. You see it the odd time, but very rare. Sector rotation has continued to hold this market up. Interesting enough, the airlines actually finally caught a bid there yesterday, and some of these airlines were actually up 2 or 3%. So what are your thoughts here on the airlines? Time to go bottom picking or just hands off?
Yeah, we bottom. Outside of semiconductors, obviously semis had a great day with the Broadcom situation and everything,
Yeah.
which is great. You want to talk about, reasons to not be bearish. I mean, when you got semis breaking out to new 52-week highs like that, I mean, really, you're going to be bearish in front of that? So, again, it's like, we're getting back to before, sector rotation. And, speaking of which, airlines were a big winner. In the fourth quarter, monster run in January. And we've been consolidating. I think you buy it. I like it. We bought it.
Any
What else is on your
particular
radar?
any particular airlines that you're picking on that pull a chart up on and take a look at?
I like them all.
Were you buying the
bought the
ETF?
basket.
Were you buying
Yeah,
the
we bought the
ETF?
basket.
Which one?
Exactly.
Which one?
Jets.
Are you buying the Jets?
Jets.
So you're trading that one.
Yeah. Yeah. So we're in all of them. And we bought transports too. And we're long S&P futures. So
You
we're
are
in.
long.
We're very long. We're the longest that we've been since March 20th. If you guys recall, that was the day that we took all of our profits across the board on all equities.
Yeah.
We've been pretty neutral U.S. equities, as a group, ever since then, until now. And we started getting really long last week.
So
Like
you are.
my whole theme right now, just to give you guys kind of like some perspective, my whole theme is that interest rates get slammed. So if I'm right, and I've been right as interest rates have been getting slammed, over the past week or so, I think that I think bonds obviously rally. So we're long, we're long as could be, U.S. Treasury bond futures. And, I think, stocks catch a bit too. I think rates get slammed and both stocks and bonds do well. And that's the camp that we're in right now.
JC, what about your Disney short? Because you're so bullish the overall market, did you cover that short, or are you still staying short the Disney?
I'm still in it, and so it goes to show you my, we were in the puts. We shorted it right away, the common, and
Yeah.
Took some of those profits and rolled them into the puts. I do that a lot to essentially create risk-free trades.
Nice.
We did that in the transports, for example, a few weeks back. Is it working? It's not working, quite frankly, which is probably a bullish thing. The fact that it's been consolidating sideways. I mean, we're still in it technically. We'll continue to reevaluate, and if it starts to break down below Tuesday's lows, maybe we'll short the common again. But yeah, we're in we're in the options right now, in the put options that expire in June. So that's deteriorating. So the profits that we had early, I'm kind of seeing them dwindle away every day. But it's hard because I want to have some shorts on. We're also short gold miners as well. So, I guess those are the hedges. I mean, between, short Disney, short gold miners, and long bonds, those are essentially the hedges against our, very long equities position.
JC, I want to talk to you. I mean, when you mentioned that date, March 20th, right away it popped in my head that was a triple witch. And now we're starting to wind up here, and it's at the end of May here, and we do have another triple witch in June. Is there been any historical patterns you've noticed as far as like the expirations go, and perhaps exerting a little upward pressure on the indexes?
I'm good buddies with Jeff Hirsch, who's the Stock Traders Almanac. And, we talk about that all the time. And, it's interesting. Options expiration, the triple witch after September tends to be the worst one. When it comes to that sort of stuff, I mean, seasonality is interesting and everything like that. But I'm not going to make executive decisions strictly based on, the week after Memorial Day is supposed to be super bullish, or, options expiration. I'm not going to do that. At the end of the day, prices will pay. So I think maybe it was more of a coincidence than anything else. But we took all our profits. We were very long the Russell 2000, from early February, and we were very long healthcare, very long, both of those. On March the 20th, our upside targets were hit on both. And those were two long equity positions. So we just got out. In hindsight, looking back on it, we've gone nowhere ever since then. So clearly it worked out well, but it was strictly because of our Fibonacci extension targets were hit. I mean, that's literally it. The fact that those options expiration is just good.
Got a question coming out of the chat with a stock symbol for you, JC. Rob Hood wants to know about PCAR, PAC-AIR. Do you trade this one, and do you have an opinion on PCAR?
I don't know this name, off the top of my head. I'm going to take it and call it an airline. Whether it is or whether it isn't, I'm not sure. But, that's great. It's been consolidating here at the 07 highs for about 15 months or so, which is good. The only problem is the flat 200-day moving average, which you guys know that that really annoys me. So personally, I wouldn't be in it strictly because of that. But I'm bigger than most. But from a structural perspective, I think it looks good. We've already gone to make new highs. If I had to guess, I'm not in it. I wouldn't buy it strictly because of 200-day. For me, it's more of an opportunity cost kind of thing. I'm very selfish when it comes to the sort of stuff. So, yeah.
JC, did you witness the thrashing in Michael Kors yesterday?
Yeah, I love it. I hope it goes to zero.
I hope it goes to. Are you short it?
No, but I just, I like
zero.
it when stuff like this. I like it when stuff like this happens because there's literally no reason to be in it. So if you're in it, I mean, it's almost like you deserve to lose money. So when I see this sort of stuff, it kind of brings a smile to my face. If you look at early 2014, look at the gap up in February, for example. We were very vocal about it. I was writing about it. I was very vocal about, how bearish this scenario was. You had a gap up in February, and then you had a gap down in July of last year that created that island reversal top back down below the 200-day moving average. So there was really no reason to be in this, really since last summer. And if you've been in this, you've been losing money. You deserve to lose money. And, when something like yesterday happens, I love it. I love every second of it. I think it's great.
What do you look for in a chart? Because I know you're kind of a momentum trader and you like them obviously when they're moving higher. What do you look for? What's your signal? Like even on the Disney, when you put on that chart, what's your signal when you finally say, well, maybe the tide has turned here and maybe some sellers are going to start to come in? What do you look for signals?
Well, I mean, it depends. For me, it's more of a weight of the evidence sort of thing.
Okay.
It really just depends. I mean, look at interest rates, for example, which I'm very bearish on rates and I'm very bullish bonds. We have an obnoxiously long bond position. We've had one actually. And what do I look for here? I think this is a good example to answer your question. You got a downward sloping 200-week moving average. You have a downward sloping 200-day moving average. I look at a 14-period relative strength index. The weekly chart is completely in a bearish range, never getting overbought on any rallies, very bearish. You look at the daily, you got a bearish momentum divergence at the mid-May highs on the 10-year. So I think that's great. I think more downside's coming. We're making new lows. For me, 213 is the big number. I was very vocal about it yesterday. Man, if we're below 213, which we currently are on the 10-year, man, I think bonds are going to rip. I think the rates are going to get slammed. And so if you're a bond bear and or you're an economist, I think interest rates are going up for some reason. You really want to see rates get going to the upside, like right now.
JC, taking a look at a stock that's been beaten up here in the oil patch. Seadrill had a huge dividend. They let it go. The stock got pounded. Kind of crawling back with oil here. Had a nice rally from 9 to 15. Pulling back to the $13 level here. Any thoughts on...
What's the ticker?
SDRL. Seadrill Limited. It's a drilling company. Got shellacked when they had a huge dividend. They got shellacked when they cut
I'm back at 20.
Yeah, $20. Got all the way down into single digits. Now recovered. It's just kind of, ignore this one. Not a place to put your money. Not good enough chart. Or are you seeing some value in this issue?
No, you know what? I think you put this in the category with the rest of the energy names. The E&P names, the oil services names, the integrated oil as a group, oil as a commodity. And if you didn't catch the bottom, when we were buying these things towards the end of March, when you and I talked about it, going into early April, that was the trade, the mean reversion trade in emerging markets, energy, base metals. We thought that was a big theme going into Q2. Once we got into May, that was over. And hey, sorry about that, guys. But yeah, my point is that I think it's over. I think if you missed the trading opportunity for mean reversion, now's not the time. I think we either go nowhere or go lower. So neither one of those are reasons to buy, in my opinion.
What about the biotech? Some of them have been quietly starting to catch a bid finally. Obviously, since March, they've been pretty much straight down, even looking at Biogen here. But it snuck its head above 402 there yesterday. Looking at some of the other big ones, Celgene's come back off of the lows. Gilead has actually been one of the best performers. It's pulled significantly, or it's been going straight up here, really, ever since the last couple of weeks ago when it bottomed at 100. What are your thoughts on the big bio?
I got to tell you, speaking of sector rotation, this was a big leader, and while money has been, rotating since late March into the, energies and base metals and that world, the healthcares and the biotechs have been consolidating in a healthy way. And, here we are looking at XBI, for example. Speaking of March 20th, the day that we shorted biotechs, we're back to that level for the third time. And God, I got to tell you, that's bullish because, the more times that a level is tested, the higher the likelihood that it's going to break. And this is now the third time. So is this going to be it? Maybe not. I don't know. Maybe we have to pull back one more time and then break out. But man, I got to tell you, the rotation is so healthy, and seeing money going back into the sector like this, it's got to be a positive. I like it. I think if I was a higher.
367 was the high yesterday in that IBB, and then you have a trio of highs going back before you had the last move down right at the 367, 368 area. So big area, you're right, 4 times knocking on the door here. We've been on the line with JC Parets. He's the founder of Eagle Bay Capital, a 10-year veteran and market technician who manages money. It sticks to his technical analysis. Thanks a lot for coming on, JC. We'll talk to you again next Thursday.
Thanks again for having me, guys. Have a good week.
Thanks, JC.